Hey, what's up, guys? Welcome back. Welcome back. An interesting day on Wall Street. The S&Ps have done the unthinkable and pulled back to support. So usually in an uptrend, a pullback to a 21 EMA tends to make for a good buying opportunity. And I think we're going to learn a lot more on Thursday after Apple and Amazon earnings. But for now, guys, I'm going to be a little cautious. I'm not in a rush to get long. I'm not in a rush to get short. And we'll see what tomorrow brings. Tomorrow I might get long or short. But for now, I'm going to be a bit more of a patient observer. And a few reasons being, notice here on the daily chart, today the big three indicator went from bullish to neutral. We went from the green bar, the green arrow, to that big fat ugly gray bar. So to me, that's the first indication things are getting a little tired. It's not a great short, at least as it currently sits, but as far as looking for that immediate push higher, that is always a little bit easier when you still have the active buy signal. So your daily chart goes from bullish to neutral, and then I think a huge part of a big driving force behind a lot of the recent momentum, from a squeeze perspective, was your weekly squeeze. And now we're at the point where that weekly squeeze fired long about 9 weeks ago. So the rule of thumb is usually once the squeeze fires, it can be good for 8 to 9 or 10 bars. And then usually that's where things kind of fizzle out and, that's all she wrote. Everything pulls back a little bit, everything resets, and you take it from there. So I think as a swing trader and a day trader, really important to keep in mind that a lot of things work really well when you have the wind at your back. So trading squeezes, buying the dip into a support level, my favorite trade, the bull squeeze, they all work really well when you have that wind at your back. And there's no coincidence. Back in May, I started a small account with 2,500. Traded that for about 5 or 6 weeks and turned that into over 25,000 bucks. Now, part of that was really aggressive position sizing, but a bigger part of that, guys, was I started trading that small account on the 17th of May. A few days later, the daily squeeze here fired to the upside. So now there's an environment where I can go find my go-to trade. I can go find that squeeze of the buy signal, all that good stuff. And again, I've got the wind at my back. So if there's a time to be aggressive on your go-to trades, it's when the market itself has a setup that can give you some serious gas behind your trade ideas. And I don't mean gas in a negative way. So I think, take a few things into consideration. The weekly squeeze is pretty much towards the tail end. We have pulled back to daily support, but everything's just a little bit... Everything warrants a little bit of patience. If we end up under the 21 EMA with nothing but sell signals, then we might see a decent flush. If we can hold above that 21 EMA and then the 15-minute, 30-minute, hourly charts, they all start to print a fresh buy signal, we might head right back up. I do think there's a potential here, unfortunately, for August to be a little bit choppy. We might just kind of bang back and forth here near that 21, and then eventually look for your next solid directional move. So a few things there on the S&Ps. Quick look here at the QQQ, and the Qs are pretty much in the same boat. Last couple of months here, price comes down to that 21 EMA. Makes for a really good buying opportunity. That might be the case once again. But we'll keep on taking it day by day, and we'll get through Apple and Amazon earnings first. And then 2 more things for you guys here. You could call them warning signs. I would call them reasons to pay attention. If you check out the dollar here, the Dixie, the almighty buckaroo, It's not super bullish, but it does make some progress here over the last few weeks. And if we're looking for strength in the market, ideally we're not getting any strength out of the dollar. A weak dollar is good for the S&Ps, the Qs, etc. So they've got a fresh cross of momentum. Structure improves a little bit. You're back above the 21. Today you closed above the 50. They canceled out the daily sell signal. And they're printing buy signals on the 4-hour, the 2-hour, the 1-hour, and over on the 5-minute. So definitely keep an eye on this in the short term. If the strength for the dollar does continue, that could end up being a bit more problematic. And then the junk bonds here, the HYG, the junkies, pretty busted. And they were making good progress. If you're looking for strength in the equities market, you want some strength out of the junkers. So this was shaping up pretty good. They crossed momentum, back above the 0 line. They had some buy signals. Everything kind of goes to crap here today. Under the 21, under the 50, and under the 200. So if the strength in the dollar continues, if the weakness in the HYG continues, those are a few things that could put pressure on the market. So as far as the next round of trades from here, it's not as if there's a lack of good-looking setups. And we're hanging on to a few for now. We kept our calls in ADI and U.S. Steel. But the thing right now is it's not an ADI problem. It's not a U.S. Steel problem. It's not a Tesla problem, a crowd problem. It all comes back to the S&Ps and the Qs. So looking at ADI here, this is still a really, really solid daily squeeze. The squeeze prints, the indicator prints a buy signal, and the A+ label is green. So I've got to love that. A squeeze with a buy signal at the buy zone. Like I mentioned earlier, this kind of setup of these signals works really, really well when the S&Ps are doing something like this. They're coiled up on a daily chart, they're coiled up on a weekly chart, they're pumping out buy signals, they fire a squeeze, and it puts a wind at the back of everything. That's when my go-to trade can thrive. ADI might remain a really good quality setup. It's probably not going to outperform or trade higher at all if the S&Ps end up taking out that 450 and trading lower. So a big part of trading is the quality of the setup, the entry, the quality of the signals, but then also you're trying to get most aggressive on your go-to setups when you have the alignment from the market. The S&Ps are gearing up for a big push, the Dow, the Qs, the small caps. Then you've got the green light to go and get busy. When these bigger squeezes, like a weekly squeeze, have come to an end, everything tends to pull back a little bit, everything tends to get a little bit choppy, and that can lead to a 1 to 2 or 3 week period where you do want to be a little patient and wait for things to align for a push higher again. Not my preference, of course. I'm a gunslinger. And, shooters like to shoot. But that is what I'm seeing for now, guys. Weekly squeeze fired long about 9 weeks ago. So probabilities-wise, we're towards the tail end of that move. And now we've pulled back into a daily 21 with a neutral signal on the big three. So my game plan for now is get through Apple and Amazon earnings, and then we'll see what's up from there. We know the template of what we're looking for. If the S&Ps are above 450, 15-minute, 30-minute hourly charts go bullish. I want to continue to trade things like crowd, ADI, etc. We break a little bit lower here, I'm probably thinking about some call credit spreads. So we'll see what's up here the next few days, but as always, I appreciate y'all watching. Do me a big favor. If you haven't already, hit the like and a subscribe button, and I'll talk to you in the next one. Adios, guys.